Hi, Tom Lydon with ETF Trends. Here in Hollywood, Florida at the Inside ETF conference, I'm here with Jim Ross, who's chairman of the Global SPDR Business at State Street Global Advisors. Great to see you, Jim.
Tom, great to be here. Thanks for having me on.
It's kind of a celebration. 25 years ago, you and a team launched the first ETF, SPY, the S&P 500. A lot's gone on, but can you give a little insight of what it was like back then?
It was pandemonium. We didn't know what we were doing. No, in all seriousness, it was a lot of work. It was a lot of hard work, technology, UAT, all that stuff that no one thinks about to see whether or not creation, redemption, and in-kind processing could actually work.
It never happened before.
Never had happened before. I mean, things had moved in kind, but not in a basket form like that for 500 stock in a registered 40 Act vehicle.
Yeah.
So there was a lot going on at that point.
Tell the audience why you started it, because there was a purpose, obviously a purpose behind it. Yeah.
Well, let's be clear. The American Stock Exchange, it was their idea. They brought it to State Street because they needed a partner that could work on it with them, that could do the back office processing, do the money management, and they wanted obviously to list and trade on their exchange. So it was born out of a crisis. It was born out of the crash in 1987. And the SEC had done a review on that and said, we think one of the problem was people didn't have anything to really hedge with that would securitize. And they were throwing like sales and a lot of trades in on single stocks. And Nate Most from the American Stock Exchange came up with this idea. It was not fully baked, but it was like, okay, how do we try and work on this? Took a lot of time to get it through the SEC.
So it would obviously help liquidity if there was one ticker that could handle the S&P 500.
100%. And that was the goal. The goal of SPY and ETF from the start was it was going to be an institutional trading product. Yeah. And we envisioned maybe 3 of them at the time. Yeah.
So there you are, say 12 months later. What did it look like at that point? What type of hiccups did you have and what type of success?
So it had not been a raging success 12 months later even. So at the end of the first year, it's about $460 million. So that's almost 12 months. End of the second year is about $440 million, and we were wondering if this thing was going to make it. And then it started doubling to 95, 96, 96, 97, 400 to a billion, billion to 2, 2 to 4, 4 to 8. Didn't quite go 8 to 16, and went 8 to 13. But that was a down market year. So I think we saw a lot of different things. A lot of stuff worked. Some things, like the whole basketing process, was kind of new. And every once in a while, I would get a call from this one person. There was like one person at one firm. Jim, I think you have a problem with your basket. And the first couple of times, I was a little skeptical. If he called me like 4 times in a couple months, I'm like, I think you have a problem with your basket. Then, oh yeah, we do. Sorry. But no one was looking at him that much.
Sure.
It was still very new.
Yeah.
A lot of action going on about how do we try and raise assets in this, mainly led by the American Stock Exchange and the lead specialist, Spear Leeds and Kellogg.
Yeah. So here we are, $3.6 trillion, 25 years later. Did you ever imagine it would be anything like this?
Not even remotely close. I can't even sit here and look at you. I was going to just change the whole story today and say, I planned this all from the beginning. I knew this was all going to happen, but I decided not to. So no, in all seriousness, it was something, it was a vehicle which we thought had some flexibility to it.
Yeah.
You know, we liked the idea. The one thing I always liked about ETFs, and I still do, everyone pays the same price. So it's a very democratic product compared to other vehicles out there. And I think so. Early on, I'm like, okay, this is interesting, but we really didn't see the shift of this to the financial advice and the shift of that business. Because remember, ETFs work really well for financial advisors in fee-based accounts. They really weren't all excited about the fact that it was one ticker for one commission in 1993 to get to exposure to 500 stocks. That wasn't really how stock trading worked at the time.
Yeah, absolutely. Okay, so you look to the future. Do you think we can continue to have this growth?
I think we continue to have this growth. I think the growth will not only continue, I think it will continue to accelerate. Because we're looking at a US market, it has grown and grown very well, but there's still pockets of the globe that it's just adopting ETFs and just starting to get to know them. So I think from a global growth standpoint, we will see significant growth trends over the coming years.
Opportunities where overseas markets may even catch up to US markets?
I don't see them catching up, but I can see that growth really helping to accelerate the global growth of the ETF market. When you look at markets like India and China that are really just starting in the ETF business. Yeah. Australia is a good ETF marketplace, but there's still a lot of pockets in the world and a lot of developing countries. So there's more middle class Chinese investors, Chinese individuals than there are Americans.
Sure.
So I think there's a lot of opportunity for the future of the global, but I also see significant growth continuing here in the US.
Okay, so give me a number at a certain date in the future. Where's this going to go?
Well, I've already put it out there, so I'll say it again. I can see, once again, everything working on all cylinders. And I mean that because you need the global growth trends, you need some of the institutional adoption that we're seeing from the insurance companies, you can continue acceleration of the advisor world. I'd love to see ETFs get more play into the defined contribution world, but I can see it getting to 25 trillion by the end of 2025, which really isn't that far away.
25 trillion to 2025.
It's aggressive.
Wow, that's great. Well, listen, congratulations.
But 460 billion to flow this year helps that a lot.
It does, yeah. And if we break that even more,
Yep.
hey, congratulations. And we're really proud to be associated with State Street.
Yep.
And most importantly, I've enjoyed our friendship over the years
No,
too.
it's been great.
Thank
I
you.
would be remiss if I didn't say SPY also crossed $300 billion last night.
All right, there you go.
Thank you very much.
Congratulations.